Hello, it's Adil bringing you a intermarket analysis outlook on the US time zone, US markets for the Monday, the 26th of January 2015. Okay, it's been an interesting few days in London. It was very interesting. Met a lot of students. Was invited to meals at various locations, and that was very nice and very kind of them. And for them to certainly host me. It was very hospitable, and we had some very interesting conversations. Also, obviously, my partnership with Midas Investments now, and working obviously with them and helping educate the potential future traders, and eventually, obviously, lead towards setting up a fund of which these individuals will be able to trade. Obviously, once we raise their game, raise their understanding, and the whole concept is to create trading machines that actually have the ability to trade at a successful rate above the 60 to 70 to 80% success rate, and obviously they can eventually trade independently themselves if they wish, or hopefully they'll be able to trade our fund, etc. That's basically what the operation is going to be. Okay, so very similar to what Mr. Lex Van Dam does, or any hedge fund manager does. You allocate capital or you diversify capital. So if you can diversify it between 50 to 60 very proficient traders that have unique and different trading styles that suits their personality, obviously their risk tolerance, etc. And then even if say 70-80% of those have a good day, then you're always in the money, and it's a very lucrative and shall we say a very efficient model. And again, it's something that I like teaching, and I like creating traders. And those of you that are on the live analysis service, those of you that watch these videos, those of you that are on my website, those of you that are on my Twitter feed, realize that I not only do I obviously talk about the markets, discuss the markets, but I also trade the markets as well. Very different to a lot of individuals out there that only talk. Okay, so we talk and we walk the walk. Okay, so what will be interesting as well is we're setting up a Midas Investments fund as well that hopefully will be tracking my trades, and hopefully that will be put out there in terms of profit and loss, and that will be interesting for everyone to watch and observe, because if any education or education based company is helping and creating individuals, and they should be able to prove their and confirm their results as well. So again, that's something that I've obviously discussed, and that's something that I'm going to be creating and doing as well. Hopefully we put out weekly profit and loss reports or daily profit and loss reports under the company's name to show that yep, we actually do educate and teach, and we actually produce results as well. Okay, that's the best way to teach somebody, is by actually doing it yourself and showing them. I've been doing it for almost 10 years now via the live analysis service, and you can certainly see the results, but which have recently been documented by a subscriber to show you that I consistently hit an average of 200 points per week. Obviously the last month or two or three have been very volatile, have been quite difficult. Last week I ended up with 112, 116 points, and this week at the moment I've taken what, 3 trades, 4 trades, 5 trades so far, currently plus 36 points for the morning, although it has been quite a difficult volatile period this morning. Okay, let's discuss. Okay, so let's discuss the US markets. Okay, right, so we come into Monday with the Asian markets initially down, US markets down on the futures. So if I just bring up exactly what's happening here, so the Nikkei is negative overnight, therefore risk-off scenario. One would have presumed the yen pairs are obviously under pressure as well, with the yen rallying and CHF rallying as well. And that was what the initial case was. On a Sunday night, everything was down quite substantially. European indices were down, were gapping lower. US indices were gapping lower. Asian markets were expected to gap lower. But China certainly came back strong, and Shanghai came back strong. I still have my Nasdaq trade short active. Okay, but the Nikkei is still weak. So therefore, from my perspective, one would certainly short. Obviously, the futures moved higher, so I attempted to short the FTSE this morning from the get-go, and from the 6796 region, 6798 region. The market certainly pushed higher, pushed back. I closed it for +5. The market's pushed higher again to 6812, 6815. I got an average around 6815, and the market's pushed high as high as 6844, 6841 or 42. My stop loss was 44, so I just about survived. And then it pushed back down now to 6800, and I closed for +7 on the FTSE 100. So basically, what's happening at present, I'm currently short Europe and I'm short the US as well. My bias remains bearish. Why? Because of the Syriza government. Okay, they are anti-austerity. Okay, they're going to encourage and basically promote this version which is against the Troika. Okay, and especially the Germans. The Germans certainly abhor it. Okay, and they're pro-reform, and they're very prudent, especially given the fact that they've balanced their budget. Okay, so they want everybody else to encourage them to do that as well, and obviously fight the concept of excessive credit, excessive leverage, and excessive risk. So it's all about prudence. Okay, now this creates a lot of political uncertainty. Stock markets hate uncertainty. Generally, whenever you have a market that's risk off, money generally tends to push into the yen, CHF pairs. Well, CHF, and obviously given the fact that the dollar as well is already high quite substantially, and there's really no, I mean every other bank on this planet is trying to do QE, and it's only the US markets that have actually stopped doing QE with their tapering program. So obviously the dollar will catch a bid. That in itself would send commodities lower, and as you can see, the oil price is lower overnight. We're touching the $44 level. Okay, and you can see that copper certainly got smashed overnight. We dropped down to 245 from 265, 270 last week, and gold prices certainly have been hit as well, regardless of the QE by the ECB, and regardless of the uncertainty and the fear from the Syriza-led government. Okay, so you have all these extreme parties now that are getting galvanized. Okay, and this isn't exactly conducive to economic growth. Okay, so anything that's that hampers or undermines or basically the ability for a nation to remain, shall we say, diverse, tolerant, okay, generally is considered negative. And the other obviously negative factor is this snowstorm that's about to hit the New York area. Obviously, that's a lot of flights have been cancelled back and forth, and that hits a travel and obviously a leisure industry and or tourism industry, and obviously that's negative for growth as well, because given the fact that New York will be at a standstill, and that's one of the important cities in America. Okay, so again, all these factors together certainly are indicating negative. Okay, we have the Saudi situation with the king passing away. Again, that creates some uncertainty with regards to the oil price and so on and so forth, and a lot of instability there in the region. Obviously, with Iran, we also have the Russians being warned again with regards to the escalation in Ukraine. So there's a lot of geopolitical and socio-economic ramifications now at present that certainly need to be considered. So all of this is interpreted as potential, well, not potentially, it is risk off, especially given the fact that the US markets are certainly under pressure, given the fact that the dollar is certainly hurting future earnings, because a higher dollar doesn't exactly help in terms of exports, and that itself can be negative for earnings going forward, and that's one of the reasons why you have the US markets under pressure. Now, the US markets certainly finished negative on the Friday, even with QE announced from the ECB. So again, one person's gain is another person's loss, so it's a zero-sum game. As you can see here, the Dow average, Dow finished down -140, the Nasdaq finished negative as well. So all these but the US markets basically were inherently negative, or in the negative bias regardless. Okay, so at present, let's see exactly what's going to happen now that we know that the fundamental backdrop in terms of geopolitics is certainly bearish. What will happen now to technicals? Okay, we've got a chart of the Wiltshire 5000. This is something that Anna Cooling, one of my mentors, has always told me basically to observe. Okay, her book is very good for those that want to learn and learn her work. Okay, so basically we have obviously horizontal resistance here on the daily chart, so therefore the one would indicate resistance there. Let's have a look at the transportation average. Okay, transport certainly looking weak. Okay, although it is an inside bar, one has to respect that for now, but we are certainly holding holding some form of resistance, and it's generally not a good sign. Okay, so this is basically where we are. Okay, so that's basically our resistance zone. Okay, so diagonal trend line resistance is being respected and being held, and that certainly needs to be taken into consideration. Okay, now the Dow Transportation Index. So let's have a look at the Dow 30 now. So looking at the Dow 30, we're in the same type of zone, or same type of resistance zone. The concept is we're making lower highs. Whether we break out here now, and is this a breakout, or is it a fake out? You clearly see it's a fake out. we come back lower, and obviously given the fact that the ramifications in Europe will have a negative bias, then this will obviously send this market lower as well. Okay, with regards to the Dow. Okay, let's have a look at the actual S&P 500 now, which is one of the most important charts that we observe. Okay, so S&P 500 again, same with the Wilshire 5000. This is basically in a holding resistance. Given the fact that you've got a horizontal resistance, that's confirmed by the geopolitical risk-off scenario. So therefore, we are looking for a potential move lower here as well. Okay, so again, resistance. Now let's have a look at the actual other variables, such as the IWM or the Russell 2000. Just to confirm the weakness or test the weakness, you can see again Russell 3000 there, horizontal resistance. If we go to the Russell 2000 index again, let's just have a look at this on a daily chart. Okay, so again we have, I mean, this is quite feeble really. You do have an unfilled gap above, but the whole concept is this move really hasn't been quite substantial, given the fact that we've more or less bounced off the lows, but again it's looking potentially weak. Okay, so given the fact that you've got the situation obviously in the Ukraine, in Saudi Arabia, the uncertainty in Europe with regards to the rise of this strange and extreme party. Okay, so we'll see exactly what happens, whether they can deliver, whether the European Union folds, so on and so forth. So because they've been sworn in power and they want to renegotiate the whole loan, and the ECB has consistently stated that it's not interested and in renegotiating the current obviously offer stands, and it must abide by the rules and regulations that have been set. So again, it's all about uncertainty, folks. Stock market hate uncertainty, and that's what creates a risk-off scenario. Okay, so again, Russell is certainly weak. Now let's test the Nasdaq. The Nasdaq, you can see here, textbook style horizontal, well, diagonal trend line resistance. We put in a doji. Okay, so looking at a potential lower high, so certainly needs to be respected there. We can confirm that with the semiconductors, as you can see here, 20 MA moving below the 50 MA, so potential lower high again, lower lows, lower highs so far, so therefore bearish. You got the biotechs also holding that resistance zone. It's a contracting, rising, contracting wedge that generally indicates weakness. So you're looking for a move lower, and obviously given the fact that the Syriza party is in power, so again that's creating uncertainty, political uncertainty with regards to Europe, so on and so forth. So this is going to be very, very interesting. Now, one of the other dilemmas as well that a lot of people are not taking into account is the fact that we have this new Greek government is actually pro-Russian. Okay, it has had backing, and it does support the Russians against the invasion of Ukraine. So that's going to add an interesting scenario, or interesting, shall we say, permutation with regards to the market and geopolitics and socioeconomics as well. So again, these are all factors that we certainly need to take into consideration. Okay, from my perspective. So again, the whole theme is uncertainty regards to Europe. Therefore, it's a risk-off scenario. Okay, so now that we know that the semiconductors and the US markets overall are into resistance, and they've been lagging regardless anyway, either they play catch-up to Europe or they lag Europe, and one would basically presume, well, basically, obviously, if there's any economic data that's strong and quite supportive, then yes, you will get that. But given the fact that the dollar itself, like I said, is appreciating, and obviously that's hurting earnings going forward in terms of their ability to export, that doesn't exactly bode well, especially with the euro being absolutely obliterated. I mean, we currently, if you go to a daily chart, I mean, you can see it clearly there, quite a substantial sell-off. I mean, you go to a monthly chart, it's very hard to find any real support for this, really. I mean, you have this here, then you potentially have this here at 1.1. So again, these are just weak support zones. Okay, so it's going to be interesting. This zone here, it's probably more reliable, but again, that's interesting. Okay, with regards to the dollar appreciating, and that's obviously hurting or causing the US markets to lag to a large extent. Okay, so again, we'll be relying on economic data to really move the markets in either direction with any sort of conviction and continuity. But at present, we are all indicating resistance. Okay, and that's going to be the key with the Nikkei lower overnight, and we have factored in a lot of the Chinese markets higher, and it's all about the actual Nikkei now as well. Now they have been talked out of Germany with regards to QE and whether it was justified and so on and so forth, and a lot of it has been priced in as well, so they always state buy the rumour and obviously sell the fact. Okay, so basically that's where we are. Okay, so my position remains risk off scenario, given the fact that Greece is obviously in power, basically shifting towards an extreme, whether it be left or right wing, etc. And we have a risk off scenario. Okay, folks, so wax on, wax off, risk on, risk off. Goodbye now.